Hello and welcome. I'm Andrew Sachs-McLeod, Chief Executive Officer in Finance Feed. And here today in Limassol, Cyprus, I'm joined by the guy with the bow tie, Marshall Gittler.
Hello, Andrew.
Hello, Marshall. Nice to see you.
Nice to see you.
And today we're going to talk about the last year. It was made quite clear by some of the very big companies in this industry, especially in the Far East, which is really strange because they're away from this matter, that the US dollar is the currency for this year, is the benchmark for the year. And by that, I mean the currency to use as a kind of a vantage point, if you want to call it that, to look at the euro and the pound, whilst the European Union and all of the geopolitical factors that are actually currently affecting it pan out. This is very interesting, right?
Yeah, I think the U.S. is a totally isolated or a totally different case than what's going on in the rest of the world. That in the rest of the world, they're fighting deflation. The economies are really are still struggling to recover, and there are a lot of problems. So with most of the other countries, it's basically a race to the bottom. The U.S., however, they've already started raising interest rates. The economy there, at least if you listen to what the Fed's saying, has come out of recession or has recovered.
Yeah, that's right.
And so it's a different case. Therefore, it stands alone in relation to all the other currencies. With the other ones, they're going up and down relative to each other, perhaps while the dollar moves independently. So I think for a lot of people, the dollar is the benchmark this year, and all the other currencies are going to be a race to the bottom.
I think that's absolutely right, and I think that certainly, exactly as you say, the US is unique in the respect that it's a totally Western country with a very highly sophisticated economy, which spans from technology to financial services, and it's not just one city centric. It's the whole. You have Chicago, New York for all the trading desks, and you have Texas for medical technology, you have California with all the startups. It's distributed around the country and therefore quite stable. And they have certainly come out of recession. All those house foreclosures are a thing of 5 or 6 years ago now. So it seemed to be panning out that the European situation with its deficits and so forth is something which you can, as a trader of US dollar against European currencies, whether it might be the pound or the euro, is some way you can maximize the volatility. But very interesting, you pointed out, which is something which not many people are focusing on, that everybody is focusing on oil and its decrease in price at the moment, which has collapsed down to $30 a barrel. It might even go down much less than that from last year's 115.
Yeah, I think it was up there, 115, yeah.
Which admittedly is an inflated value. But the thing that people are not focusing on in any sector of this business is that European bank stocks, including some of the largest interbank forex dealers in the world, are actually collapsing at a much higher rate than the oil.
Oh yeah, the European bank stocks have just crashed
Completely.
so far this year. There's a lot of worries about the Italian banking sector in particular,
Yes.
because they've got, I think Italy alone accounts for something like 30% of the bad loans in Europe. And they have no solution.
No solution
really.
at all.
There's no solution. They agree with the EU on how to deal with it, but there's a lot of questions about whether they'll really be able to implement that solution. And if not, how do you deal with it? And it's a huge banking sector. And to make matters worse, the Italian companies rely on banks for about 85% of their funding.
They do indeed.
So how is Italy going to get out of the mess that they're in if the banking sector doesn't work?
Well, it's very difficult for them because Italy was one of the only countries in Europe which had a traditional manufacturing sector up until quite recently. But the manufacturing sector, which included things like air conditioning units and motor manufacturing and things like that, even though whether their end product was any good or not is
Well,
debatable.
I wouldn't mind a Lamborghini myself, but a Maserati, I'd accept one.
Interesting. They actually sold all that. So the thing is that
Well, yeah, it's not all. Yeah.
it's made there maybe, but the thing is that the problem is now that was largely invested in by governments. The large industries, large traditional legacy industries like vehicle manufacturing, electronics, domestic appliances was largely most of the companies that do that had big government stakes. There's not much money left, and what's happening is that countries like Britain are sponsoring the European Union to $55 million a day, something like that, and it's no longer sustainable. So I think that from a currency volatility point of view, as you see governments unable to fund public sector stakes in companies, it might cause some extra volatility in the Eurozone, in that western section of the Eurozone.
Yeah, so far it's actually, that's one of the remarkable things about the currency markets right now. To me, Europe seems to have a lot of problems. Mm-hmm. Okay, the economy is doing okay or doing better than it's surviving, but politically and economically and financially, the banking sector, it's got a lot of problems right now. But it doesn't seem to be affecting the currency markets that much.
Right.
I mean, I just mentioned the Italian banking sector, but frankly, the Portuguese banking sector has collapsed much more than them.
It has.
And even the Greek banks are down 50% this year alone. After it's just a stock that falls to 20 cents can then fall to 10 cents, and it's down 50%.
That's not really surprising, I guess. But the thing that's interesting here is that you're right, that the actual currency value has. As we were in Hong Kong a couple of weeks ago, you and I, and actually we were talking about the prediction, how institutions predict the future value of currencies, and how, in effect, the euro value against the dollar was kind of way out in terms of its predictions for the end of the year last year. It finished at 109, something like that. Am I right?
Well, and for this year, basically there are two ideas. And the whole forecast for the euro dollar in the market is based on the monetary policy divergence theme. And some people think monetary policy will diverge between Europe and America, and some people think it won't diverge. The people who think it will diverge are dollar bulls, and they see euro dollar going to, say, parity.
Yes.
The people who think it won't diverge think because the Fed, they think the Fed isn't likely to tighten. Those people think it's going to 120. So on average, the market thinks it's going to be stable, 109 or 110.
Sense. Until something happens that is. Now we've got the elections coming up in North America. So when that comes about, it could be. I personally, I don't know. I'm not an expert on this matter by any means, but I would say that parity is quite likely.
Well, personally, I think so because I just think the Fed is determined to continue hiking rates. I don't think the U.S. economy is going to collapse, as many people in the market do.
No, I don't think so either.
And I think they're determined to raise rates not necessarily because they think inflation is a problem or anything, but just because zero interest rates are an abnormal emergency measure. If you don't have an emergency anymore, why do you need an emergency measure? I think that's their way of thinking. So maybe they raise rates to 50 basis points, 75 basis points. This is not tightening.
No, I mean, right.
Under normal circumstances, you would think 75 basis points interest rate is pretty stimulative. The Bank of England stuck at 50 basis points. So I think they're going to be willing to do this, talking about it not as tightening, but as normalizing interest rates. I think they're determined to keep doing that. Meanwhile, in Europe, though, they're very much focused on their single mandate, which is inflation. Yes. Inflation isn't going to hit their target anytime soon, and I think they're going to have to keep easing and easing and easing. So personally, I'm still in the monetary policy divergence school. Mm-hmm. I think the dollar is going to continue to strengthen.
Yes, I do too. I totally agree, and I think it's a question of the difference between the U.S. economy as a federal economy, which is well distributed, and the U.S. still has a very, very good quality business environment for small businesses and small to medium-sized enterprises that are revenue generators. It has a very good environment. Whereas Europe doesn't have such. Especially in sectors like in London, where you have the institutional forex industry and the interbank sector, some of the fintech companies, but the very big ones, some of the big liquidity providers, you're either an employee of a very big company or a public sector employee. It doesn't have so much emphasis on entrepreneurism as the US does. And entrepreneurism from a young, new generation point of view is a driver of strength of economy.
Yes, that creating the new companies, creating new employment.
That's right.
I mean, most of the people in America work for small companies.
Yes, they do.
Where do those small companies? They didn't start out as big companies and get smaller. They started out as small companies and got bigger. And that's the driving force.
I think that has a big bearing on it. I think this is being overlooked to a large extent.
Yeah, that's why one reason why unemployment is so much higher here.
Correct.
In Europe than it is in the States.
And in some places, in some parts of Southeast Europe, you have 57% unemployment of people under the age of 30.
Yeah, it's really destruction of human capital.
Completely.
These people will never be able to achieve in their lives what they would have otherwise.
That's right. And it will also affect it will also have an effect on the need to provide social programs instead of the US version of this, which would be to stimulate entrepreneurism and actually be self-sufficient. So this is also a factor that could affect the strength of the actual capital economy.
Yes, if the governments have to ramp up their borrowing in order to pay for the social welfare
Yes.
for these people who are unemployed because of government policies that prevent people from getting employed.
That's right.
It's kind of a vicious
Or even
circle.
that prevent them from starting their own businesses.
Yes.
This is the thing. So yes, I totally agree. And I think certainly the Japanese companies, big Japanese firms like DMM Securities and GMO Click last year, and Monex Group, huge Japanese electronic trading company, published a report stating that the US dollar will be the staple currency for 2016. And they'd researched all these factors from the outside. They're looking at it from Japan, and Japan is a very domestic market. Nobody in Japan does any business outside Japan. It's totally loyal to Japanese companies. It's very hard to get into an overseas firm. They did their research, and they're looking at the wider electronic trading field and saying that actually the USD is the staple currency for the West. And I think actually now what we're seeing with all of these factors we've discussed is it looks like that absolutely was a very good analysis.
Yeah, I think, well, recently the dollar's been weakening recently just because of fears about the U.S. economy and thoughts that the Fed isn't going to tighten again.
Yes.
But yeah, we saw last year that the first quarter growth for the last couple of years has been unusually weak. But it's recovered later on in the year, and sentiment recovered later on in the year. So I think we could see the same thing.
Even if you're not really an expert, let's say you're a layman and you're somebody who likes to you're a part-time trader or something like that, you just want to do a little bit extra in your spare time, you can look out of your window. If you look out of the window, you can see brand new American cars made in America. You can't see new European ones. They're all made in Korea or China. So the industry that's going on, you see infrastructure like the train systems in foreign countries that are not in Europe are made by China. Or just now, we've seen over in Israel, there's a new high-speed train system, Canadian. They're not European suppliers because the European suppliers are finding it hard to stay in business, or they're selling their entire business units off to other countries. So the actual manufacturing sector is depleting dramatically in parts of Western Europe, which was traditionally known for legacy manufacturing industry.
Well, not completely. I mean, certainly German exports are doing okay.
Still are. That's right.
Yeah, they've got one of the biggest current account surpluses certainly in the world.
They have indeed. I think they're number 2 after China.
They're a huge exporter.
They are, yeah.
But
that's true.
Yeah, I don't know that much about the other countries though. Yeah, a lot of the industries have been decimated or been sold off.
That's right. Which I think
look for a UK car manufacturer.
Not anymore. And they used to be the very best.
They used to have a lot. Well, I don't know if they were the best, but they were certainly a lot of
discounting the 1970s, probably.
Oh.
But yes, they were very good. But now not anymore.
Yes.
That's right. Which is a great shame. But I think that's it looks to me. I would ask your advice on this, but it looks to me like these analyses were actually correct about the US dollar's position as a benchmark from which to trade.
Well, I think it is. It is certainly the reference point in the foreign exchange market in general, and this year, just because of the unique position of the U.S. within the global monetary system right now, I think it is standing apart from the other countries.
I totally agree.
The pound was, people did expect Britain to raise interest rates sometime this year, but that's been pushed off, and in fact, the market's starting to price in even a chance of a further drop in UK rates, the further easing there.
Talking about Britain, would you invest in any of the, you have large companies in Canary Wharf and the Square Mile, which are some of the biggest interbank forex dealers in the world. Would you invest in any of their stocks right now?
Well, I work for FX Primus, and I would only buy FX Primus stock myself if I could. I think
it's really something which is being overlooked, as we said earlier. That the decline of some of the largest institutions in the world is higher than that of oil. So it's kind of interesting, really.
Oh yeah, some of the major banks. Because once again we're back to where we were in 2008 with people saying, "Hey, what's on their balance sheets? We don't really know."
Well, that's right. I mean, you have companies like Credit Suisse who recently made the biggest loss, the first annual loss since 2008, since the pre-financial crisis era, but it was a massive loss. And I think now you have even the CEO taking a massive cut in his remuneration because of it. So it's actually gone that far. But
we should take up a collection for him.
Yes,
I feel very sorry for him.
You can get a little plastic cup and put the little cash into the plastic cup. What about Toto? Tell me about Toto a little bit. the Star Wars references that you
Oh,
made.
the Wizard of Oz.
Yeah, sorry, Wizard of Oz, exactly,
Toto.
Wizard of Oz.
Sorry, I thought you were talking. There's a Japanese company by that name. Toto. Yeah, I was talking about the Bank of Japan. As you know, recently initiated or moved into negative interest rates, which was a dramatic move. I expected them to do it sometime, but not this early. And it really was a shocker and a very significant moment for the foreign exchange markets. Up until then, the ECB had negative rates, but that was just one major central bank. There was the Swiss National Bank in Denmark and Sweden also. But there was only one major central bank that was doing it. Now with two, it really ratified negative interest rates as a policy, as a standard operating procedure for central banks, a standard tool in their toolkit of monetary policy. So it was really a dramatic move, very significant. It didn't work. I mean, this shock move didn't work. Dollar yen went up, and a week later, it's down below where it was when they did it. Meanwhile, the Tokyo stock market's back to where it was in 2014. And I think most significant, if you look at inflation expectations, inflation expectations actually fell further downwards or declined at an accelerating pace after the move.
Right.
In other words, the move made people even more pessimistic that the country was going to get out of inflation, out of its deflation or no inflation. In fact, inflation expectations in Japan are now back to where they were before Prime Minister Abe was elected on a platform of getting inflation back up.
Right, I see.
So it's all a wash. Everything that the Bank of Japan has done has really only been enough to stay in place.
Right.
All the running they've done has just kept them in place.
Makes sense. So they face a lot of economic competition now from other Asia-Pacific upstart regions, which are not necessarily, they're upstarts in the respect their economies have developed over the last 10 years, but they're now massive powers. You have China, Hong Kong, Singapore. Singapore is home to a massive interbank sector for the Asia-Pacific region. China, powerhouse, just huge, sophisticated country, and that Japan is finding this is the competition from these regions very difficult, I think.
Yes, and for example, 30 years ago, Japan dominated the global electronics sector.
Yes, it did. All technology, pretty much.
Look, Sony was in the 1980s. Sony was where Apple is now,
yes,
and where is the Apple
absolutely right.
of Japan now?
Well,
Sharp they're selling off Sharp.
South Korea, LG.
Yeah, LG.
Companies like that in
So
South Korea.
there's a lot of new competition coming up. Plus the demographics there. You have a shrinking working population.
Certainly, yes.
It's very hard to increase demand when the number of people working isn't increasing. It's shrinking. So the fact is they've done the overall figures mask the fact that really on a per capita basis they've done pretty well. Per capita GDP growth in Japan has been higher than in Italy, for example.
Yes, it has.
Just the number of capitas has been falling.
Right.
So the aggregate figure doesn't look very impressive, but when you look at what's happening with individuals, it's not that bad. And if you look at the actual level of deflation, prices have fallen maybe 4 or 5% over the last 10, 15 years. That's not a whole lot. It's not like the country imploded. But I used to live there. Remember, I got there in 1987, and I was shocked to find that a pie that I like to eat at the hotel next to me cost 500 yen, $5. That was 1987. I left in 2005. I think the pie was still 500 yen.
Yes, because it's
still 500 yen.
Yeah. Makes sense. But despite even so, it was still back then quite relatively expensive living costs.
Oh yes, well yes. Certainly, unfortunately, my salary had gone up by that time, and 500 yen then was not the same expense for me that 500 yen was when I first arrived.
Interesting that this is another factor that should be concentrated on is what I call negative appreciation. It's not depreciation, but it's where something which used to be expensive remained at the same price whilst everything else accelerates. And Japan certainly had this for sure.
Yes, and in fact, back in the 80s, a lot of people were doing their PhD dissertation on the question of why are prices so high in Japan. So the idea that they would have deflation, I don't really think it's anything. To me, it wasn't anything you should fight in Japan. The problem was prices were too high to begin with, so it just seemed to me to be natural that prices should fall.
That's it.
Now they're quite reasonable. When I go there, actually, it seems cheap relative to Europe.
Right.
So
Right.
there's nothing there that's
Even in
particularly
Tokyo?
expensive. Yeah,
Really? That's interesting.
it's not particularly expensive on a day-to-day, but it's not like going to a third world country or
No,
something
no.
where it's not like going to some place like Mexico was 40 years ago where things are unusually cheap.
Yeah, that makes
I don't think
sense.
that the deflation has been a problem there.
Right. Interesting.
But the problem that they face if they don't get inflation is their government debt.
Yeah.
If they don't
Huge
inflate, if
government
they don't
debt.
get some inflation going, then once they start having to
This is
repay
where
their
they
bonds,
can't compete with China, because China, being a communist country, doesn't have that problem. Because what happens is the difference. Japan is very much an Asia Pacific style of doing business, but the economic system is a Western model. Whereas China, you want to start a company in China, there are no lawyers, no management consultants, no fees, nothing like that. The law is that the government must buy 50% of your company. And then what they do is they send all their government officials, who effectively carry the position of management consultants and lawyers. It's all free, and they'll drive your business forward. And there's so much more scale that the Japanese business people can't compete with it, because they have expenses that the Chinese entrepreneurs don't have. So it's very difficult for them to compete. And nowadays, the quality of the end result is very similar. It's very hard to beat that when it's on your doorstep.
yeah, the Chinese are very price competitive. But I don't know about forming companies in China. That's I'm a currency guy, not
a menace,
not a management.
Right.
Right.
Well, that's the thing.
But-
It's a menace because it will have an effect on all of this in the end. From what our research shows, that's a difficulty for Japan in a way.
Yeah, well, they do have a good business exporting things to China. I mean,
Yes, they do. Yes, they
especially
do.
the capital goods business.
That's right.
But a lot of the consumer electronics and that sort of business has moved over there, and
Yes, it
there's a
has.
lot of competition from domestic Chinese companies. That, yeah, it's very difficult for them.
That's for sure. Very interesting indeed. Thank you very much for joining us today, Marshall.
My
Very
pleasure.
It's always nice to
Nice
see
to talk
you.
with you.
I'm Andrew Sachs-McLeod, Chief Executive Officer of Finance Feed. This is Marshall Gittler here in Limassol, Cyprus. Join us again next time. See you soon. Goodbye.